This is Satya Human from Cirrus Research. I want to call your attention to the recent Notepad. It's a look at climate change and its impact on capital markets. The title of the report is Inflation. It's not the pandemic, it's climate. Duh. The idea here is that some of the changes that we are starting to see really becomes more of a structural issue and a risk towards inflation. If you look at the first chart here, and this is data taken from NOAA, climate disasters, they seem to accelerate. If you look back going the last few decades, this data goes back to the 1980s. Specifically, what you're looking at are climate disaster counts. That's the blue bars that go back to the 80s. In this case, what they've done is taken really billion-dollar events and to summarize them. What we see here, if you go to the 80s and 90s, these billion-dollar events, maybe there were 3, 4, or 5 or so a year. In the last decade, they've gone up to basically 8, 10, 12. And in the last couple of years, what we've seen is these numbers have really escalated to north of 20. In fact, when you look at this data, break it apart by various types of events seasonally from January through December, what we've also noticed is that there's a lot more randomness to the event and the disasters that appear to be occurring. Not only are they on the rise, but they're also more random. The case in point was what we witnessed in December with the tornadoes swinging as far east as Kentucky. Now, the spikes in climate events drive pricing uncertainties. I think that's fairly clear. It'll echo through a number of things. In this case, we've tied it together with the PPI. In the CBO report, though, they basically make the case that they expect to see an increase in pricing volatility. Now, this only makes sense if you begin to limit the sort of farming lands available, the labor that's available, and ultimately limiting output. So these things, when you bring them together, it becomes structural, not just something in passing. And so tying it together with this moment of the pandemic, which in some cases, the supply chain events that are occurring will end up being somewhat transitory. However, when we're talking about climate events and the billion-dollar amounts that are occurring randomly through the year, these things will represent more of a structural change on our assumptions with inflation. The hope in this effort, this is early. We've begun to look at the climate data and how it really impacts the capital markets. The idea is let's try to drill down into this and see how it not only impacts the capital markets, but explicitly tie it back to the equity markets. Thank you.